U.S. bank reserves have crashed to the lowest level in 5 years, and right on cue, the Fed has quietly stepped in with emergency lending, while also announcing the end of quantitative tightening. This isn't a coincidence, it is a coordinated effort to keep the illusion of stability alive just a little bit longer before the next crisis. A crisis that threatens not only your deposits and your savings, but the value of the dollar itself. But these moves actually reveal more than they hide, showing us just how close we are to the breaking point, what happens next, and most importantly, how you can protect yourself before it's too late. In case you missed it, U.S. bank reserves have dropped to $2.8 trillion, the lowest level since 2020. As that number continues to fall, banks have no liquidity, threatening not only your deposits, but the entire system as a whole. And the Fed knows it, which is why just last week they quietly injected $29.4 billion in emergency loans to U.S. banks through their overnight repo facility, the largest amount that they've done since 2020. And the mainstream media, they're not going to report on this because they don't want the public to panic over emergency bank loans. But make no mistake, this is a silent bailout, a backdoor lifeline by another name to ensure that liquidity continues to move and that the entire system doesn't seize. But that's just the beginning. See, just a few days before this injection, the Fed already was laying the foundation for ending quantitative tightening or pulling money out of the system, instead gearing up to put more in. Not because they conquered inflation, not because the economy needs it, but because the system cannot handle any more tightening, meaning that they are warming up the printing presses as we speak, which is terrible news for anyone holding dollar or dollar-denominated assets, which we'll talk more about in a second. But first, when the Fed printed trillions back in 2020, they didn't just inflate asset prices, they also created a flood of new bank deposits. U.S. bank deposits soared by nearly 30%. Today, U.S. banks have close to $20 trillion in total deposits, but rather than protect those deposits or store some of those reserves away, what did they do? U.S. banks took all that extra liquidity and dumped it into U.S. treasuries that were supposed to be safe, except guess what? They weren't. Between the continued weaponization of the dollar, the seizing of Russia's U.S. reserves, inflation, and a system so reliant on debt, suddenly demand for U.S. debt started to disappear. But as demand has dropped for U.S. debt, the yield or the interest paid has started to rise. Investors need to be paid more to take on U.S. debt risk. But this has created two major problems. Number one, every new dollar that the U.S. borrows now costs more, which is a lot of dollars and bad news because the U.S. is not planning on slowing its spending anytime soon. And number two, it means that anyone who is holding older U.S. treasuries is now sitting on a loss. Let me explain. Let's say you bought a 30-year treasury bond in 2022 that had a 2% yield, a 2% fixed interest payout. Well, that's great until today you look and see that the 30-year treasury bond now has a 4% yield or a 4% interest paid out. Well, you're going to have a really hard time selling your old treasury bond when someone today could go buy a new one and get double the return. To sell, you'd have to slash your price, sometimes dramatically. That difference between what you paid for it versus what it's worth today, that price drop, is an unrealized loss. It's not realized because you haven't sold it yet, but on paper, it's worth less than what you paid for it. It's like if you bought a house for $500,000, but today that house is worth $400,000. You're living in it, you haven't sold it, so it's not like you've lost $100,000. But if you ever needed to sell that house, if you needed the cash, that unrealized loss becomes very realized very quickly. Now picture the entire U.S. banking system back in 2020. Flush with all of these deposits, they take those deposits and invest them heavily into U.S. treasuries, which at that time, the yields were far lower, meaning that today all of those treasury bonds are worth far less. That is the massive pile of unrealized losses that U.S. banks are sitting on today. But selling these bonds would expose the damage, triggering write-downs and causing panic, which is exactly what happened to now failed Silicon Valley Bank. So instead, these banks are forced to hold on to all of these bad assets without any liquidity. But it doesn't stop there. Commercial real estate is another ticking time bomb on these banks' balance sheets. You see the empty office buildings, the empty strip malls. Delinquencies are hitting record numbers. At the same time, the property values for these commercial properties are dropping. So what do banks do? They're extending and pretending the loans, but in reality, the assets themselves are worth less, meaning they have even more unrealized losses. In fact, today, U.S. banks are sitting on roughly $400 billion worth of unrealized losses, and that's just what's visible. And I'm sure someone out there is going to say, okay, so what? Haven't these banks had these unrealized losses for a while? What's different now? And before I tell you what I think, tell me what you think. I want to hear from you in the comments below. Do you think that this is all overblown? Or do you think that this house of cards is ready to collapse? Let me know your thoughts in the comments below. Because if you ask me what's different right now, it's that the Federal Reserve is showing us through their actions what we can expect to happen next. Number one, sneaky backdoor overnight emergency lending, right? A backdoor bailout by another name, just the beginning. At the same time that they are ending their quantitative tightening. This means that there is a liquidity crisis. We've known this for a while, but it is finally reaching the breaking point. They can't do anything else about it. They're going to have to print more in order to keep the system alive, which means that every single dollar in existence, your savings, your retirement, your deposits, your cash, anything out there is going to be worth less. Our purchasing power is going to continue to be stolen from us. They've already been doing it for years. Inflation has not gone away. The rate at which it's gone up has just slowed, but not for long. We can absolutely expect that rate to continue to go up. It means that your dollars are going to be worth less, while real true money, physical, tangible gold is going to be worth more. In fact, right now, there is a massive movement happening across the world, a global monetary reordering. I am calling it the Great Gold Reset, because that is exactly what is happening. And if you want to understand more and learn more about how you can protect yourself from this, I am very excited to announce that I will be hosting a live webinar. It is completely free. Again, it is live, which I'm really excited about because I can engage with you. I'll be doing a Q&A on the Great Gold Reset, the dollar's collapse, and this global reordering with gold at the center of a new monetary system. The 5 phases that we're seeing, right? The moves that are being made, the timeline that's happening, and what is coming next. So make sure that you reserve your spot. You can register by scanning that QR code on the screen, or there's a registration link down below, again, completely free. I will be doing a live Q&A. This is November 18th, a Tuesday at 10 a.m. Pacific Standard and 1 p.m. Eastern. I really hope to see you there. And in the meantime, if you have any questions, call us at the number below or set up a time to talk to someone from our team. We at ITM Trading are a full service physical gold and silver dealer, meaning we sell physical gold and silver. Sometimes I see your comments asking, where can I buy my gold and silver? You can buy it here, but not only that, if you've been watching us for a while, you know how important education is to us. So if you call us at the number below or set up a time to talk to us, we will help you create a custom strategy, one that is tailored to you, your needs, your concerns, and of course, what is coming next and how you can prepare and plan for what is coming next. So again, call us at the number below, click the link in the description. And as always, I so appreciate you being here. I'm Taylor Kenney with ITM Trading, your trusted source for all things gold, silver, and lifelong wealth protection. Until next time.